Welcome to the Financial Freedom Podcast with your host, Lorna Poole, sharing the secrets to creating wealth, investing, and that all-important money mindset. To find out more and accelerate your journey to financial freedom, head on over to www.lornapoole.com to get started. Welcome everybody. Welcome to Financial Freedom Podcast. Why should you consider buying gold? Well, my guest expert today, Peter Hugg, is the Director of Global Trade for Kitco Metals Inc. Peter has been involved in the precious metals industry since 1974. He speaks to thousands of viewers each week on Kitco News, drawing on years of frontline experience to provide a trader's perspective on the market. Mr. Hugg contributes daily commentary and market insights for the millions of readers visiting Kitco.com each month. A frequent speaker of precious metals conference and in the financial media, Peter is one of a handful of experts who have succeeded through multiple bull and bear cycles using skills honed during the dramatic fluctuation of the 1980s. Prior to joining Kitco, Mr. Hugg served as a senior vice president at Guardian Trust Company, now a part of Laurentian Bank, is that correct?
Laurentian.
Which became one of the largest industrial trading houses for precious metals. Mr. Hugg developed the first precious metal certificate program and the first margin trading account for metals on the cash market. Peter, great to have you here. Such an honor.
It's been a pleasure, Lorna. Thank you very much for inviting me.
You know, I've been learning about financial freedom, and I was advised that gold is a very important part to have in your portfolio. Why is this, or why should people consider gold?
Well, I'm not one of these analysts that'll tell you that gold's going to go to $10,000 an ounce.
No.
I just think that everybody's portfolio should be balanced. And
yes.
And in the context of having a balanced portfolio, I think gold forms an integral part of that balance. I'm not suggesting that gold is always the best asset to hold, and it's certainly not the worst asset to hold. There's times when you want to be weighted in gold as a sort of as a balance to your portfolio, as a protection to your portfolio. And there are times when you want to be less weighted. Right now, we think that precious metals, specifically gold, are in an uptrend. We called back in September of 2018, we thought that the August low at gold at $1,150 was probably the bottom. And we indicated that we were constructive the gold price, and gold today at $1,325. We continue to be constructive. We think gold has the potential of appreciating throughout 2019 as an asset class, and as such, we think it makes sense to have it as part of your overall portfolio balance.
Yes, and don't they say when the markets, you were talking when I introduced you about the crash and everything in the 1980s, don't they say gold is a great asset in these times? Is that correct?
Well, it depends what you mean by these times. I mean, obviously in 2008, gold was an excellent asset to have in your portfolio when we had the financial meltdown in the equity markets, and the Federal Reserve moved interest rates from approximately 3% at that point down to zero. We felt gold was an extremely good asset to hold in that environment. Again, gold is good, but it's not the best asset in the world. It's not like gold is the be all end all in from an asset class. There are times when you want to be overweighted in gold, and there are times that you want to be underweighted in gold, the same way you would be underweighted in either bonds or in equities, depending on the cycle in the markets. What we saw back in late 2018 was the Federal Reserve that was extremely hawkish indicating that they were looking to raise interest rates as much as 4 times in 2019. We disagreed with that prognosis. We thought that the Federal Reserve at best would be neutral with interest rates in 2019, and in fact probably would be likely to lower interest rates through the latter half of 2019 as the US economy slowed. So if you take it into context, the gold price basically moves adversely or inversely to the move of the US dollar. So back in 2008 through 2011, the Federal Reserve dropped interest rates from 3% to 0, and that created a drop in the US dollar, which was very positive for the precious metals. Since 2012, the Federal Reserve has been raising interest rates, which has been positive for the US dollar, which has created a downdraft in gold since the high of $1,925 in 2011 for gold, down to a low in 2016 of $1,060. Now, recently, the Federal Reserve has come out and indicated that they are going to be very neutral in interest rate increases in 2019, and some analysts are actually expecting them to drop rates somewhere towards the mid to latter part of this year. That being said, that should be negative for the US dollar, which has been price positive for the commodity sector in general. And that's why we continue to be constructive on the gold price, even though the price has moved from $1,160 back in September of 2018 to the current price of $1,325 as we speak today.
Wow. And when you talk about precious metals, what other metals are we talking about?
Well, generally, precious metals, when people talk as precious metals, they usually, there are 2 metals that are basically part of the formula. One is gold, one is silver. Silver tends to move with gold. It tends to outperform gold when gold moves higher, and tends to underperform gold when gold moves lower. And one of the differences between gold and silver is that silver tends also to be an industrial metal, so it does have some the movement in silver does have some correlation to what the economy is doing. If the economy is slowing down, industrial demand tends to weaken. So silver doesn't perform as well as gold in a weakening economy. But overall, silver outperforms gold both to the upside and to the downside when there's movements in the market. In sort of a contingent group to the precious metals are what are called the PGM metals, which include palladium, platinum, and rhodium. Palladium is at an all-time high. It's never been as high as it is today. It's trading at about $1,450, and rhodium is trading north of $2,500. And that price we haven't seen since approximately 2011, when rhodium was trading at about $2,800. So both on the palladium and the rhodium side, there's some reasons why we have this strength. It's mostly a supply issue. Both palladium and rhodium are in deficits relative to demand. And most analysts are expecting rhodium and palladium to continue their upward trend, whereas gold is more correlated towards the financial markets and interest rates. And because we believe the Fed is going to be neutral to dovish interest rate increases throughout 2019, we continue to believe gold is a good investment for the balance of the year.
And how does someone, if they want to have gold in their portfolio as part of their diversification to make a balance, how do they go about getting involved?
There's a variety of ways that investors can be involved in the gold market. One, they could buy ETFs that are traded on the exchanges. They could buy gold mining shares. They could buy physical gold and either have it stored on an allocated basis with the dealer of their choice, or they could take delivery of the gold to their homes or to their places of business. And then they would have to then figure out how they're going to secure that gold and store it and insure it, etc. So the mediums for investing in gold are varied. it really depends on the psychology of the investor. Some investors are comfortable with investing in ETFs, investing in mining shares, investing in mutual funds that invest in gold. Other investors tend to have a little less trust in the system, and they prefer to have their gold delivered to them in physical form. And you can trade in gold from as little as 1 gram gold wafers, which is the equivalent of about a 32nd of 1 ounce, 32nd of a percentage of 1 ounce, or you can trade as high as 400-ounce gold bars, which are the bars you see in the James Bond movies.
Yeah.
So it's really up to the investor how they want to participate in the gold market, but there's certainly a wide variety of options open to investors that are interested in adding a gold to their portfolio.
Yes. What do you mean when you talk about the bull and bear cycles using skills honed in the fluctuations in the 1980s?
Well, what I mean by that is that nothing goes up in a straight line, nor nothing goes down.
No, that's true.
There's reasons for cycles to occur, and the duration of the cycles are dependent on sort of the factors that create the cycles. Whether it's an interest rate cycle or whether it's a geopolitical risk. So there are times when you want to be less invested in gold as a portion of your portfolio, and times when you want to be more aggressive. And that really does go by the cycles. Now, to give you the example of when I got into the business in the 70s, in 79, inflation through 79, 80, inflation ran up to 18%, and the US dollar collapsed, and gold ran from about $100 an ounce to almost $850 an ounce. So, in cycles where you have high inflation or where you have zero interest rate policy, those are usually cycles where you want to be more heavily invested towards gold, because really what the gold price indicates is sort of an inverse reaction to where the value of the US dollar rests. And in cycles where you have high inflation or zero return on your investment in dollars from the point of view of interest rates, the US dollar tends to suffer. And in those cycles, gold does very well. In cycles where you have high interest rates, real interest rates, and you don't have a threat of inflation, gold prices tend to do poorly. So it's within the context of those cycles that you want to be invested, and cycles tend to run anywhere from 5 to about 8 years. Now, we've had a down cycle in gold for the past almost 8 years from the high of 2011. And so now we're just about entering into a cycle where we think the gold price may be on an upward trajectory for the next cycle. So we still think this cycle has probably the next anywhere from 5 to 7 years to run. So we think we're just getting into the beginnings of the next bull cycle in precious metals.
Wow, yes. And how did you get involved in the 70s? How did you even come to be part of this? And
totally by fluke, like most people do when they get into this business. Being a precious metals dealer, it's not like you can go to school and take a course and then come out and apply for a job as a precious metals dealer. I was working my way through the University of Toronto back in the early 70s with the full intention of being a teacher.
wow.
And when I came out of university, there were no teaching jobs in Canada, and one of the individuals I worked with, believe it or not, when I was a waiter, who was an ex-Swiss banker that had moved to Canada, couldn't find a job because he didn't have Canadian banking experience, but ended up getting a job at a foreign exchange dealer, called me and said, "Peter, you might be interested in getting into the foreign exchange business." And I looked at him totally dumbfounded and said to him, "What is the foreign exchange business?" And he indicated that there was a business where companies that had payables and receivables in foreign countries had to convert their Canadian dollars into foreign exchange to pay for those goods that they were buying from Germany at the time, or pick any country you wanted to pick at the time. So I said, okay, so what's involved? And he said, well, let me just come in and join the company and learn sort of from the bottom up. And I started in the business as a foreign exchange trader for a company called Deke Pereira, which at the time was the largest global retail foreign exchange dealer on the planet. They had offices in some 80 countries. And I joined their Canadian operation in 1973 and literally learned how to trade foreign exchange. And within a few months, I was the head trader for their Canadian operation.
Wow.
A couple of years later, there was a bank called Guardian Trust that wanted to open up in Toronto, and also was a foreign exchange dealer, but wanted also to introduce precious metals as part of their business product line. And so I learned precious metals literally from not understanding anything about the metals industry. I started in 76 learning about the metals industry, and then I was fortunate enough to be in the market when the gold market took off in 79, and silver went from about $4 or $5 an ounce up to $50 an ounce, and just learned literally from my bootstraps. Back then, there was no internet, we had no computers. We were working off IBM Selectric typewriters, and everything was done over the telephone.
Yeah.
I just sort of learned by the seat of my pants, and I've been in the business ever since. And that's how I got into it, literally by fluke. Not that it was a career objective of mine to be a precious metals dealer. So that's how it happened, and it turned out to be a career that I've spent the last 40 odd years doing.
Yes, wow. We've had an amazing conversation. For anybody who's out there listening today, they're thinking about getting involved in precious metals. What would you say to them?
The one thing I would say to people getting involved in precious metals is educate yourself. And again, I'm going to say this very transparently. This is not a promotion for Kitco. But when I was approached by Kitco, I was quite frankly, I was in retirement, but I got a call from the owner of Kitco in 2010, who ironically had been a client of mine back in the 1980s and 90s when I worked for the bank, albeit I didn't know who he was. But Bart Kittner, who owns Kitco, called me and said, look, Peter, I've grown the company from an employee base of 10 to 220. And I was wondering if you'd be interested in running my precious metals division. And, I looked at it, and quite frankly, my past life working for the bank, I was a wholesale precious metals trader. We were making markets to the Russian central bank and to the big Swiss banks of the world. So I was used to doing trades in the neighborhood of 100, 200,000 silver at a clip, and anywhere from 5 to 10,000 ounces of gold at a clip. And here was a retail precious metals dealer, albeit probably the biggest in North America, that was reaching out to me to run their precious metals division. So I looked at Kitco, and I wanted to, first of all, to see what they did and whether or not I'd be interested. And what struck me about Kitco, and to this day I continue to feel that they are unique in the industry, is that they have a division called the media division, which is responsible for the kitco.com website. And when you go onto that website, you'll notice that on any given day, there's anywhere from 20 to 50 commentaries from various professionals in the industry, and they're not slanted to be bullish. They're not out there screaming that the gold market is going to $10,000 an ounce, which most precious metals dealers do because it's in their interest to have clients buy from them. But they give a balanced view of the market, and people can actually read these commentaries and understand why the market moves, what creates movement in the market. So my recommendation to anybody that is not in the precious metals business or has had no experience in it is to read these commentaries and educate yourself as to why things happen. And then from there, you can then make a decision what type of precious metals investment makes sense for your own portfolio, and whether this is the right time or the wrong time to be engaged in the precious metals market. Once you make that decision, then you have the option of coming to Kitco and either executing that strategy or going to whatever dealer or broker that you want to go to execute your strategy. But I think the first thing in any investment, whether it's gold or stocks or bonds, is you understand what you're investing in and what the risks reward is likely to be, as opposed to, listening to your neighbor that said, I heard gold's going to $10,000 an ounce, you should buy it. I mean, that's just, in my opinion, not the proper way to do it, whether you buy Apple stock or whether you buy gold. Learn about what you're getting involved in, realize what the potential risks are, be prepared with an exit strategy, and look at your timeline as to what you're looking to realize. And I think that is beneficial whether you're buying gold or any type of investment going down the road. I mean, if people want to reach out to me, they can certainly send me an email at phug.kitco.com. I can't promise you I'll give you a reply the same day, but I will get back to you. I give you my word on that. But on Kitco.com, I tend to give weekly commentaries, generally oriented towards traders, as to where I see support and resistance on the market, and where I think the market may go, and why I think the market may go a certain direction. Again, whether you read me on Kitco.com or a variety of other analysts, most of the analysts that we have on Kitco.com have been in the industry for multiple years and are experienced traders and analysts. So again, I welcome you to come out and read the site. And if you have any questions, you can either, contact me directly at my email address, or just listen to my commentaries and comment accordingly. Thank you.
And all the links will be on the show notes. Thank you, Peter.
Thank you.
Hey everyone, remember to join us in the Private Financial Freedom Podcast Facebook group with me, your host, Lorna Poole. This is a safe haven of like-minded wealth-getting go-getters who, like you, are on their journey to creating financial freedom in their life. This is where you and I can get intimate. I can give you the support and guidance to go from where you are now to where you want to be, developing your wealth mindset and creating your financial freedom life. Join at www.facebook.com/groups The Financial Freedom Podcast. You will see the links to this on the website. It's in the show notes, or type it into the Facebook group. All you have to type in is Financial Freedom Podcast and you will see us there. Look forward to seeing you in the group. Take care. Thank you for joining us on the Financial Freedom Podcast, to creating wealth, investing, and developing your money mindset. To get started today on your journey, head on over to www.lornapoole.com and grab your free course, 5 Steps to Breaking Free from Your Poverty Mindset and Accelerating Your Journey to Financial Freedom. See you there.